Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Elon Musk enchants investors with his vision of the future as questions about the SpaceX IPO are brushed aside at an investor event. Plus, coming in hot, jobs surge in May, but tech stocks are under pressure as investors reassess the path for interest rates. And three of the biggest names in AI at Bloomberg Tech San Francisco. We're going to bring you those conversations throughout the program. SpaceX's IPO is absolutely dominating the news cycle, but there is so much happening in financial markets and a lot with the tech sector. The S&P 500 is down a percentage point, but really the underperformance is in chip stocks. We're down 4.7% on the stocks. Interestingly, we're still positive on the week, but everyone kind of talking about chips and saying we are due a correction. Actually, outside of chips, the rest of the AI trade is getting hammered. Those jobs numbers for May were hot. US 10-year yield, 4.5%. So bad news, guys. I'm sorry, I know it's Friday. The S&P 500 is down on the week, and that means that it will not, as it stands, hit a historic 10th week of gains. It will stop short at 9 straight weeks. Again, the SpaceX IPO, the imminency of the pricing next Thursday and the trade following, that is a big factor in the markets. It is going to be some form of catalyst, and volatility is being very closely watched. Let's get to our top story. Elon Musk enchants investors.
Why SpaceX public now? Because you had choices, you didn't have to. Why now?
We're embarking on a massive new growth phase, and we need capital for that.
Okay, number two.
Another thing is the revenue. I also feel pretty good about the revenue projections. Before, revenue was a little unstable.
Elon Musk still has the power to sell a vision. At a SpaceX investor event yesterday hosted by Jamie Dimon at JP Morgan's headquarters, talk of the company's future overshadowed questions about the IPO itself. The absolute latest this morning is Bloomberg reporting that this IPO is already way oversubscribed. There are a number of other pieces of news we have to get to. Bloomberg's Trudell is with us. I actually want to start just with last night. You were manning the desk, managing the team of okay, what is new in what Elon Musk is saying here? What's the big takeaway that we need to know about in what's an unusual pre-IPO pitch on stage, so to speak?
I found last night's love fest between Dimon and Musk fascinating. It's not often that you see Jamie Dimon struggle to get a word in, and yet we saw a little bit of that where it took time for Musk to get through his answers, and he was quite long-winded, and they had some fun about that, as we saw in that clip. I think also, Musk was pretty forthcoming about this notion that what's driving this is that he needs capital. And, we saw this week as well, even at Alphabet, this notion that a company of that size, that is that cash generative, still is going out to raise $80 billion with the backing of Berkshire Hathaway. So I think this is part of, this broader movement by tech companies and by AI hyperscalers to raise absolutely as much money as they possibly can, given just how intensive this race has become.
If you're watching Bloomberg Tech and you're coming to this story fresh, that's a surprise. But basically, SpaceX is on a roadshow right now, and they plan to do final pricing of the IPO next Thursday. They've already said $135 a share, raising more than $75 billion at a $1.77 trillion valuation. This will be the biggest IPO of all time. Craig, you're the managing editor that kind of leads coverage of the company. I appreciate that. But there is some kind of market mechanics things that are really important in the news cycle. One being that SpaceX and these other IPOs waiting in the wings will not get fast-tracked into the S&P 500. Can you talk a little bit about that and why that matters?
Yeah, I think that's a setback, but I think it's also the case that the S&P is deciding differently from some other indices. And so, the NASDAQ has taken a different approach. And so perhaps there will be, some indexes, where you and I, if we're invested in index funds, will get a piece of this company. And it's just a matter of some sort of spacing out of when we'll see demand for these shares from various institutional investors. And perhaps that's actually for the best, given that there is so much concern about all of these sort of market mechanics and just how disruptive this will be, given how small a float we're seeing this company list here.
Another quick story from me this morning. China and Hong Kong investors are being told, or the underwriters being told, that they can't take orders from investors in China and Hong Kong because of security. There's also something going on with Tesla and sell-side coverage that's relevant. Just very quickly sum that up for us.
It's fascinating to me. We saw last night Jamie Dimon and Elon Musk yucking it up. These two haven't always been so close, and yet the morning after, we see JP Morgan go from one of the most bearish banks on Tesla shares to a new analyst taking over coverage and increasing the price target by more than 200%. So very notable in light of last night's event.
Bloomberg's Craig Trudell, thank you very much. NVIDIA has certified Samsung, SK Hynix and Micron to supply HBM4 memory for its next generation AI chips. NVIDIA CEO Jensen Huang confirmed that move just after arriving in Seoul.
All three vendors have been qualified. All three vendors are in production, and they're all racing. They're racing all to support Vera Rubin.
The Vera Rubin platform now in full production ahead of third quarter deliveries, with systems combining NVIDIA CPUs, GPUs with those HBM4 memory chips. Again, today, right now in the markets, chips under pressure. The labor market keeps refusing to crack. Today's jobs report came in stronger than expected. But in the market, tech stocks are under pressure. Investors basically reassessing the path for interest rates. For more, we're joined by Martha Gimbel, Executive Director of the Yale Budget Lab. I always enjoy having you on the show, Martha. I think you make what's happening in the US economy understandable, digestible for a broad portion of people. What did you see in the data this morning? What was the story it was telling you?
I mean, it's interesting. This is one of those reports where, as an economist, you kind of open it up, look at it and go, wow, this is really great. Not a ton going on here. And then close it and go get your coffee. So, I think this is a report that looks like what it is. Job growth is really strong. Some lags on the wage side, particularly compared to inflation. But if you're thinking about where the Fed goes from here, this is certainly giving them room to try to do some action on inflation with interest rates.
There is an AI story here, but when we spoke to San Francisco Fed President Mary Daly yesterday, we had to get to where is policy right now. I just want to play you a soundbite from what she said.
Right now, policy's in a good place. We are prepared to respond either way, whatever the economy brings. But I think giving more forward guidance about what's possible could be misguiding in the end, because we just have to wait for the economy to evolve. Everybody wants to resolve the uncertainty today, but I think that's a mistake, because it will close off our mind about what we really have to look at.
I think that's pretty standard interim Fed speak, let's say. But one of the things we tried to get at is AI showing up in productivity data? Or are you seeing anything that maybe suggests in the labor market companies, big and small, are holding off hiring because they just don't know what AI will or won't do for them? I wonder if you see any evidence at all.
I really am not seeing any evidence of major AI impacts in the economic data at this time. I should say, obviously on the investment side and things like that, it is making a difference. But if it doesn't seem to be holding back companies from hiring at this point, it doesn't really seem to be showing up in the productivity data. In some ways we wouldn't expect it to. I know I keep saying this and I'm a broken record, but it is still early in this. It is really, really early in this technology. And in some ways we're holding it to an impossible standard to say, wow, it must already be impacting the labor market.
Martha, I mean, you're not alone in saying that. I think that's really, important to point out. People come on Bloomberg Tech every week and say this very early. One thing I really want to try and get deep into is the impact of the capital expenditure. So, the numbers are just ginormous. And as you just mentioned, in the capital markets, whether it's IPO or what Alphabet's doing in its equity offering, is all of that inflationary? Or is it disinflationary? Some of the utilities would even argue that, if the hyperscalers take the burden of these big projects, it may cause energy prices to come down. And it's always been an argument that we found hard to track.
So first of all, I think it's important to say that the most important inflationary impact on the energy side right now is what's going on in the Middle East. That's going to trump anything else. I do think the evidence is clear if you're looking at the inflation data that there is some upward impact from what is going on in the AI space. If we change what's happening on the utility side and how these things are financed, that might start working in the other direction. But I don't think that's happening quite yet.
Yeah, people sometimes have short memories. I go back, I think it was 2 quarters ago, where Meta said one reason we're raising CapEx is not because we need to spend more, it's because the cost of what we're trying to do is higher because of the environment. And what I'm trying to work out is how circular that is, how much that feeds back into inflation.
I mean, I think right now this is a sector that people really want to invest in. It's also an incredibly expensive sector to invest in. These models are not free. The data centers are not free. And so as you're having money pile into that sector, it's going to drive prices up. And then if you want to keep investing, you're going to have to pay those prices.
Martha Gimbel of the Yale Budget Lab. Hot jobs data in May. We talked a lot about inflation, though, as well. Thank you very much. Now, coming up, Anthropic's co-founder explains why the company needs to go public. A really big conversation next. This is Bloomberg Tech. Anthropic is warning that the technology is evolving faster than anticipated, raising the risk of AI systems autonomously building their own successors. In a new lengthy blog post, the company says it would be good for the world to have the option to show or temporarily pause development on projects that become too dangerous. Anthropic says it will meet with global policymakers and rival labs in the coming months to coordinate safety thresholds, all while the startup prepares for its highly anticipated IPO. And at a Bloomberg Tech event in San Francisco yesterday, Anthropic's co-founder and president, Daniela Amodei, was on stage explaining why the company needs to go public in this race against OpenAI. Listen to this.
Speaking for ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that.
I want to get deep into this conversation with Bloomberg's Shirin Ghaffary, who spoke to Daniela Amodei on stage yesterday. It's a pretty simple explanation. Why do companies go public? They need money. And you actually got a little bit deeper into Anthropic's strategy for securing compute relative to OpenAI's. I think that's a really interesting place to jump in.
Yeah, that's right. OpenAI was really early to making some splashy announcements about how big they wanted to go on compute, spending up to $1 trillion, or around that, on these massive projects like Stargate. And at the time, that was not at all something that was considered normal. A lot of people critiqued it and thought that was overly ambitious. Now we are seeing Anthropic be quite upfront about the fact that they need a lot more compute, and that is really one of the main, if not one of the main motivating factors for going public at this time.
Very quickly on Anthropic, Shirin, what was your other big takeaway? What are you going to be writing about next?
There's a lot more about just, how these companies are managing the timeline of these IPOs. On the one hand, yes, you have access to more capital, but on the other, Wall Street's going to be scrutinizing those numbers if they do flip public on the financials. And so these companies are going to have to ask themselves if they're really ready at this exact moment.
In and amongst it all, Shirin, you and I also broke a story that Brian Chesky, the CEO of Airbnb, is starting a new AI company. What do we need to know?
That's right. So Brian Chesky, co-founder and CEO of Airbnb, is starting a new AI lab, a sort of neo lab, if you will. He will remain CEO of Airbnb, and sources say he will also not be CEO of this new lab. But this is a sign, and this is a bigger trend we're seeing, where some of the existing tech founders who still want to go all in on the AI race, if they're not directly doing an AI-only company, may get involved in these sort of side projects or side companies. So it's an interesting one, and it may end up having a design and UI focus, which is something that Chesky is quite passionate about.
Bloomberg Shirin Ghaffary, top conversations, top reporting. Thank you very much. I want to take a quick look at the shares of Broadcom over 5 days. But remember, Broadcom reported its earnings Wednesday night, traded into Thursday. We're down 11% on the week. There was a big negative reaction in that Thursday session to the outlook for the current period as it relates to AI chip sales. Broadcom CEO Hock Tan was one of the biggest speakers at Bloomberg Tech yesterday. He sat down with our executive editor for tech, Tom Giles, and talked a lot about potential M&A. Listen to this.
And it's an interesting question. It's a very valid question because it crosses my mind and that of my boards on an ongoing basis, not regularly, as do we do M&A. So I'll be very flip and give you a straight answer. In the last 2 years, between 24 and 26 this year, I would be doubling my revenues. I would create over $50 billion per year, annualized, on revenue. I'm looking around, what can I buy? They even come close to that. And that's the tricky part. I mean, it's a distraction. All M&As are distraction to acquire, go to regulators, a further distraction to integrate. Another year. Meanwhile, organically, this phenomenon we call generative AI and our ability to ship them picks and shovels, the compute capacity into this demand, which is almost insatiable, makes it very hard to choose M&A over focusing and succeeding in generative AI compute.
Is there any area where you think you might want to sort of make an exception to this, whether it's maybe photonics, just to name one area?
Photonics? Or you mean optics?
I'm just throwing
anything.
Out... Yeah.
I ran a business model 20 years. I tried to, very hard, I know, try to avoid bright, shiny objects.
That was Broadcom CEO Hock Tan speaking with Bloomberg's Tom Giles. So coming up on the show, Bloomberg's got a new personal finance show focused on spending, investment strategies, and it launches today. With those two right there on your screen, we're going to speak to one of them next. This is Bloomberg Tech.
Forces of AI, right? What are they unleashing right now? They're unleashing an incredible CapEx boom. And to this audience and to the topic of the show, an incredible wealth effect, right? So when you see that, that is leading to a higher degree of economic growth than anybody expected from those two facets, right? You've got an incredible surge in investment spend coming out of this AI demand for investment and a wealth effect that's powering consumption.
That was Jeffrey Rosenberg of BlackRock speaking with Tom Keene and Scarlett Fu in an exclusive event for Bloomberg.com subscribers in New York earlier this week. That conversation coming ahead of the launch of Bloomberg Money today, a new weekly show hosted by Tom and Scarlett, airing every Friday, 12 p.m. New York time. Tom Keene's here with us. Bloomberg Money, the vertical. So interesting, like what he was saying, because like in our world over here, it's a wealth creation story from AI, right? And on the Bloomberg terminal, people have always read about personal finance, the wealth or success of their peers. What do you want to do with this show, Tom?
Well, what we want to do with it, the reps into what you're doing, Ed Ludlow, is go downstream from the fancy people you talk to out in the West Coast. I talked today to a gentleman about a company in Bismarck, North Dakota, which is directly prosperous from everything that's going on with Bloomberg Technology. There's a huge follow-on effect that Jeff Rosenberg was talking about, and it goes into the general sense of personal finance. We want to lift up that conversation. But it goes to this dream of retirement within an America with huge retirement instability, and most importantly, getting to the wealth management, being in the wealth management, and what do you do when you finally made it?
All of that is so relevant to like now, this week, next week, the coverage of SpaceX's IPO and the clamoring of basically wealth advisors on behalf of their clients. But also, like, what I'm interested, Tom, is like how much you think private markets will come into it. There's a lot of aspiration from people around the world to get involved in private companies, but the mechanisms aren't there sometimes. We've written a lot about SPVs, for example, and trying to get in on the secondary market.
The problem with a little bit of lineage is you learn that private markets means illiquidity somewhere down at the road. You do that better than me, Ed, but I would say it's a big part of what we're doing, but we're really looking much more towards the more prosaic personal finance stories, but also that new access. When you see 401ks and retirement plans that have ability in Bitcoin, have ability in any kind of alternative investments, that is a whole new world after all, and we're going to focus on that.
I'm conscious, like in the moment, what one session a market does not make, but actually we're seeing declines extend quite significantly on the NASDAQ 100 now. The Philadelphia Semiconductor Index, or SOX, is down significantly, although part of that is like we were due a correction, having been up more than 80% year to date. You go to air in 35 minutes time. I don't want to front run it, but just give me an overview of today's show. I got to ask first, Ed, have you ever enjoyed a correction? Have you ever enjoyed a bear market? Is it a whole new thing? You know, that's why I always say one session a market does not make. Stocks go up and stocks go down. And as you taught me over a number of years, zoom out on the chart. Don't look at the red flashing on the screen. I would zoom out over the chart and look at American prosperity, which is booming right now in the Caroline Hyde and Ed Ludlow world. We're going to talk to Liz Ann Saunders. She is on fire about the betting, the speculation in the market. Gabriela Santos, Ed, has one single sentence involved: you have to save more. That'll be two of the big focal points we'll look at. Bloomberg's Tom Keene, thank you very much. And please don't miss the premiere of Bloomberg Money today, 12 p.m. New York time. All right, coming up on the show, we go to space with the CEO of Apex to talk about satellite production, and then the CEO of Starcloud to talk about data centers in space. I want to go back to the markets. This is what we're going to be looking at for the next 30 minutes. There's a lot of red on the screen. The S&P 500, as it stands, is going to snap a 9 straight week of gain run, will not hit a historic 10th week of gains. Semiconductors down 6%. We're on track for our biggest drop since October. But again, chip stocks were up more than 80% year to date. Part of this is the post-Broadcom earnings story, where their outlook for the current period for AI chip sales was below consensus. There's also the economic story. Jobs data for May coming in hot. We're looking at wages. And there was a big move higher on the US 10-year yield to 4.5%. Fold into that the question of volatility ahead of the world's biggest IPO ever next week in SpaceX. All to come. This is Bloomberg Tech. Okay, welcome back to Bloomberg Tech. We have to talk about financial markets. The NASDAQ 100 down 2.5%. The SOX down 6%. There's a lot of nervousness in the market. The AI trade is getting hammered on all sides. I would still observe that chip stocks are still up on the week, but the S&P 500 is actually down on the week. That means that after 9 straight weeks of gains, we fall short of a historic 10th. Economic data is playing a role here. Jobs data for May came in hot. We're looking at wage data, and that's why you see that move in the US 10-year yield. There's also some digestion of Broadcom's earnings, which were Wednesday night, but that outlook for the current period for chip sales, AI chip sales, that did put some nervousness into the market. And a SpaceX IPO around the corner. There's a lot on the Bloomberg terminal about how that feeds into volatility. Speaking of, today's big number, 100 gigawatts. That's the annual AI compute capacity SpaceX says it ultimately wants to deploy in orbit, a lofty goal made no easier by the challenges of building and maintaining networks of thousands, even millions of these specialized spacecraft in a harsh orbital environment. What does a space-based data center look like? Bloomberg did a mock-up of how these craft would work. So this is the body. Inside, radiation-tolerant AI chips, right in here. Around them, networking layer, power, thermal management, flight control systems. Then for communications, the satellites could rely on laser links around here, rather than your traditional radio frequencies. That's kind of the squiggly line beaming back down to Earth, handling that enormous flow of data to power these systems absolutely massive solar array panels, as well as batteries to store that energy when the sun's not there, right, when it's blocked. This up here is the radiator. On Earth, data centers use air, or they use water for cooling. In space, radiators disperse the heat into deep space, and they're going to need to handle far more heat than today's current designs. Out of this world? Yes. Our next guest has already started down this complicated road. Philip Johnston is the CEO and co-founder of Starcloud, which launched the first NVIDIA H100 chip aboard its satellite this past November. Put myself on the spot here. You tell me, what was my explanation of the basics of orbital data center like? Did we get it right?
Excellent explanation.
So for you, this is real, right? An H100 inside the form factor of a satellite. Explain how you got to that point, the engineering challenge, the deployment.
Yeah, for sure. So we, as you rightly mentioned, we launched the first NVIDIA H100 in November last year. Actually, we launched a satellite which has 5 GPUs, 3 from NVIDIA, 3 from ARM, but the H100 was the most important and interesting one. And the way we got there is we started the company about 2.5 years ago, and we had a very quick development cycle for that first spacecraft. And I think on the screen here, actually, you can see one of our early renders of a very large 4 kilometer by 4 kilometer solar panel with a 5 gigawatt cluster in the middle. That would be for something like training. We're more going to be doing things like right now we're very focused on these small inference nodes. So we'll be launching. We just filed with the FCC for a constellation of 88,000 of them, which enables us to deploy about 20 gigawatts of compute.
And Philip, we're zooming out now. This is a case study of a 5 gigawatt data center. Could you just reiterate what you said about the scale of the solar arrays? What were the numbers on that?
Yeah, so this solar array on the screen is about 4 kilometers by 4 kilometers with about a 1 kilometer by 4 kilometer radiator down the back there. I would say that renders from a couple of years ago when most AI workloads were for training, and it seemed it seemed we wanted to show that if you wanted to do any kind of workload, you could, and so we showed the hardest thing. Actually now it looks like 99% of all AI workloads will very soon be inference, and so we don't need to dock together a large structure like that, and that's the reason we're now doing this distributed constellation of much smaller satellites.
So Philip, I want to be honest with the Bloomberg Tech audience. I invited you onto the program because this is SpaceX's pitch, right? A vast network of orbital data centers. And I guess that in SpaceX's case, we're still waiting for the designs. And Elon Musk has said that, in the coming weeks, he will show his hand on that. You're a company that is already doing this, yes, at right now a limited and small scale. I just wondered if you'd account for that, the idea that SpaceX plans to do this and, how Starcloud will fit in with that.
Yeah, for sure. I mean, I think we really are talking about potentially the largest market opportunity ever. We're talking about trillions of dollars per year of capex will be deployed in space. And so everybody's going to have a solution for space compute. Some of that will be using SpaceX, but certainly lots of other people are going to want more independent clouds. And so that's the customer base we're going after. Initially, also, we'll be serving workloads to other spacecraft, providing edge and cloud services for other spacecraft.
What about the deployment of your satellites? Are you a customer of SpaceX on the rideshare program, or how does that work?
Yes, we are a very happy customer of SpaceX on both the rideshare program and potentially for dedicated Falcon 9 launches. So, don't want to speak too soon, but we should have some interesting things to say about that soon.
You come back on the show when you're ready. Let's end here. What's the ripple effect of this SpaceX IPO going to be for you? Right? Is there going to be a trickle down?
Yeah, we're already seeing it. There's just enormous interest in the space industry that wasn't there before. So we raised actually the fastest unicorn round coming out of YC ever. So in 17 months, we went from basically zero to $1.1 billion valuation with a $170 million raise. I think a lot of that is fueled by people now understanding space, realizing there's a huge market opportunity there. And that's in large part because of the SpaceX IPO.
Starcloud CEO and co-founder Philip Johnston, really grateful for your explanation of the technology, but also to hear about what you guys are working on. come back. Thank you. The challenge of satellites reaching orbit has mainly been solved through reusable launch vehicles, i.e. SpaceX. But one critical bottleneck remains: scaled satellite manufacturing. That's partly what SpaceX needs cash for. Not just SpaceX. Startup Apex has just raised more than $200 million as it works to increase production of its satellite platforms for commercial firms and government work, including an involvement in President Trump's Golden Dome missile defense shield. Apex CEO Ian Cinnamon joins us for more. Ian, congratulations on the round. And thank you for being here. It's interesting what we're doing. We're trying to encompass all of this future economy. The bottleneck of satellite manufacturing, how severe is that bottleneck? Try and quantify it for me.
Satellites have been around for 70 years, right? Satellites themselves are not new. But to your point, SpaceX has really solved the key part of the space ecosystem, which is how do we deliver the satellites from Earth to space? And to give you a sense of how severe the new bottleneck is, which is actually the spacecraft production, the facility that I'm standing in right now, we call it Apex Factory 1, is capable of producing over 200 satellites per year. That is more satellites than the US government launched last year. And the demand is growing sky high. So for us, we are seeing an enormous shift in the market away from saying, let's launch one large, bespoke, exquisite satellite, and shifting to how do we launch constellations, fleets of satellites that are actually able to work together. And that has led Apex to becoming really that go-to spacecraft platform company in the industry.
So Ian, the regular audience on Bloomberg Tech has kind of heard this story before. There's a company in Bulgaria called Endurosat, which basically pitches itself as like the TSMC of Bulgaria, but similar. Contract manufacturer for satellites of third parties. Is that an accurate way to also describe what Apex is doing right now in the United States?
So Endurosat is a great company, but fundamentally a different business model from us. So what we do is if you want to make an analogy here, right, I would actually say we are the Ford of satellites. So we go ahead and we say we're going to have a set number of products, a small satellite, a medium one, a large one. Think a sedan, an SUV, a pickup truck. We design that up front, so we're not contract manufacturing someone else's design, it's ours. And we go and produce them in the factory I'm standing in right now ahead of any customer demand. So when somebody says, I need 100 satellites, or someone like Starcloud wants to go launch a constellation, we're able to rapidly supply them in a matter of weeks or months instead of years with a standard off-the-shelf design.
Let's talk about the money. $200 million raise. What is the priority for you to get scaling here? What is the thing you're acting on most quickly?
Space is expensive, right? Space is full of hardware. It's full of, expensive launches, buying Falcon 9s, buying other launch vehicles and so on. But Apex is in a very fortunate position where we're actually able to operate as a real long-term sustainable business. We have now raised 3 back-to-back $200 million rounds over the last 14 months. And we've raised all of them from a position of strength where we don't actually need the capital, but it's simply a way for us to speed up and actually go faster. So for us, that means increased hiring, increased production, and more deliveries to our customers for programs like we announced earlier this week with our partnership with Northrop Grumman on space-based interceptors.
Ian, next week, SpaceX will conduct the biggest IPO in history. How is that going to impact you in the immediate and also in the future?
It's incredibly synergistic, right? SpaceX has really opened up the space ecosystem and really paved the way for different customers, whether it be US government, allied nations, commercial customers, to shift their architectures from large, expensive bespoke satellites to fleets of proliferated systems. We supply those proliferated systems. So for us, SpaceX has been a massive tailwind in our favor that's actually helping the industry move forward at a faster pace. We are a great customer of SpaceX. We have a wonderful relationship with them, and we are very excited for their IPO next week.
Ian Cinnamon, Apex CEO, the company raising its latest $200 million round. Thank you very much indeed. Coming up on the program, we're going to hear from Thinking Machines Labs CEO, the former OpenAI CTO, Mira Murati, on what her new startup is trying to achieve. That conversation from the Bloomberg Tech event coming up next. I have to check back on markets. Look, this is where we're at. There's a lot of red on that screen this Friday. Tech is underperforming, and that's probably putting it mildly or lightly. NASDAQ 100 is down now almost 3%. The Philadelphia Semiconductor Index is down 6.5%, its biggest drop since October. There is a lot of chatter out there that, well, we were kind of due a correction in chips. The index up more than 80% year to date anyway. The S&P 500 is snapping as it stands, a 9 straight weeks of gains run, and yields are higher on the eco data. We're going to keep checking that. It's important. This is Bloomberg Tech. Humans should stay in the loop for AI, says Thinking Machines Lab CEO and founder Mira Murati. She spoke at the Bloomberg Tech event last night with Bloomberg's Emily Chang. Listen to this.
The most advanced AI systems are the most incredible tools for thought that humanity can ever have. Mm-hmm. And so how can this change the way that we think? Mm-hmm. And where we're still thinking. And but it's changing the nature of thought, what we're thinking about. Mm-hmm. And this part, I don't think is actually, this part is familiar to us. You know, since the beginning of time, like technologies have, deep technologies have changed what we think about, like language, writing, numerals. I think this is the opportunity ahead of us, this possibility to expand what we think about. And have new tangible things that we think about, and this requires this requires very intentional research work and product work in this direction.
When I interviewed you, it was early 2023. ChatGPT had just changed everything. You were CTO of OpenAI. A few folks I talked to said you basically ran the place. Just saying. When you left and founded Thinking Machines, were you running towards something or away from something?
I most definitely was running towards something once I figured out what the thing was. But I had an incredible experience at OpenAI. I was so incredibly lucky to work with some of the most dedicated and most talented people in the world, and that's incredibly special. And I'm very grateful for that experience. And you know, eventually, I had my own view of and very strong view of how I think this technology ought to be developed. Mm-hmm. And it's very rare to start something from scratch once you have developed such a strong perspective on it, and that's a rare privilege to have. And I think having a company like Thinking Machines gives us an opportunity to focus on where we have the highest conviction and build and orient the entire company around that conviction.
That was Thinking Machines Lab's CEO Mira Murati along with Emily Chang. Okay, coming up on the program, we're going to speak to Nina Achadjian from Index Ventures on how AI is remaking the physical world. A really big conversation that we've been looking forward to for a while. This is what markets look like. Tech stocks are getting hit, and the market is hiking, is kind of boosting its Fed bets, and yields are higher. Eco data, post-earnings digestion, and a little bit of giving back after a hot run for chip stocks. We'll keep on it. This is Bloomberg Tech. Software has dominated venture capital for years, but as AI moves beyond the digital world and into manufacturing, robotics, industrial systems, investors are betting that that next trillion-dollar opportunity is wrapping software into the physical world. There's also the small matter of SpaceX's IPO and the ripple effects for builders in and outside of Earth's atmosphere. Joining us now is Nina Achadjian, partner at Index Ventures, an early backer of companies, including Anthropic, but physical intelligence service titan. And I'm so glad you're here with the thesis. I would just point out there's a lot going on in public markets right now. But actually, you know, private markets are quite active in physical AI. You know, I was tracking the data, PitchBook, like 2019 to last year. It's going up. What are you seeing?
Yeah, well, thanks for having me, Ed. It's great to be here. And of course, Index and other folks in the Valley have been spending a lot of time investing in the fundamentals of AI, which have been really based on LLMs. So at Index, we've done everything from foundation model of Anthropic to inference layer Fireworks, and then a bunch of application companies. But if you take a step back, actually most of the disruption in software has really been around the knowledge worker, and that's where a lot of the investment has gone. But there's a big white space, which is what does AI do in the physical world? And that's where we've been spending a lot of time.
Yeah, for a really long time in many cycles, software is eating the world. And now people say, well, hardware is eating the world. You're basically saying both, they are joint.
Yeah, well, I think if you look at it, there's all of these functions, electrical engineers, mechanical engineers, aerospace engineers, and for decades, they have been using the same software stack. And a lot of these incumbents were built in the 1980s. And there's this huge race, not just the race to get to space, but the race to put better things in the physical world. And unlike some of the things in the digital world, if you get one character wrong in these code, something could actually blow up, like a nuclear reactor or a rocket. And so we're really interested in companies that are trying to solve this deeply technical, very domain-specific problem.
Multimodal, trying to ground the model in real-world physics, in the case of robotics. In my study of software, the VCs that come on the shows would say, we have conviction about this because there's a public market proxy. An example we can point to on how we value this company or the market opportunity for it. In humanoid robotics and other physical AI domains, much harder to do. Is SpaceX going to be a good proxy for that?
Well, I think that's why all eyes are on the SpaceX IPO. And I think that it's really opened the eyes to folks of just how compelling this market is and how lucrative it could be. And that's drawing a lot of dollars into the private sector in companies that are doing similar things.
Yesterday, I was on stage with Trey Stevens from Founders Fund. He made a very simple outline of a thesis on why SpaceX is going to work. We'll play the soundbite.
We have a SpaceX investment in almost every fund, both across our venture funds and our growth funds. So there's a ton of exposure for LPs that were with us since the very beginning, and even the ones that joined us very recently. I think the core lesson that everyone has learned from this experience is never bet against Elon. It's just a bad idea.
Pretty simple. Don't bet against Elon Musk. It's a bad idea. I don't know how deeply you read the S1 and the world that is envisioned for the future or out of this world. Mm-hmm. And how much that gave you conviction in your own thesis.
Yeah, well, I think the way that we have played it is that Elon is a huge talent attractor. And so actually two of the most recent investments I've made are both in former SpaceX founders. So one is Scott Morton from Revel. He spent 10 years at SpaceX.
That's right.
Doing launch control, and his role there really exposed him to how big of a need there is for better software for hardware, which is why he's now built Revel. And then Sergey Nesterenko, who's the founder of Quilter, spent 6 years at SpaceX, where he was really frustrated that he had to wait for a human to manually lay out a printed circuit board. Of course, printed circuit boards are really important to everything that's happening in chips. So he started Quilter to use AI to autonomously lay out PCBs.
We just have 30 seconds. I think that we make the point that whatever happens with the IPO, it will cause some volatility in public markets one way or another. But from the venture capital industry standpoint, I won't ask you to speak specifically on Anthropic. How much do you guys need some big IPOs to get the world moving?
Well, I think VC is always rooting for the IPO window to be open. It creates more options for our founders for capital and liquidity. And it's really exciting to see the ones that are lined up today. And so I think folks will be watching them very closely.
Nino Achadjian of Index Venture Partners here in SF. Really appreciate the thesis on software into physical AI and hardware. That does it for this edition of Bloomberg Tech. A crazy week. This is what markets look like. Look, tech is down. Part of it is eco data. Part of it was coming. Recap the show on the podcast. You know where to find it. Really top conversations from the last 24 hours. iHeart, Spotify, and on Apple. This is Bloomberg Tech.